Stocks sell off on Wall Street. The Dow Jones Index snaps a 6-session winning streak. The S&P and Nasdaq also slip as investors continue to rotate out of mega-cap tech stocks. Asian markets have also opened lower, while the GIFT Nifty is suggesting a slightly higher start for the Indian markets. Crude prices give up some ground after a strong rally. Brent slips below $85 a barrel even as U.S. crude inventories decline for the third straight week. Gold prices trade near record levels as hopes of a rate cut from the U.S. Fed remain high. Infosys reports strong growth after 5 quarters of weakness. The company has raised its FY25 revenue growth guidance to 3 to 4%, higher than the earlier estimate of 1 to 3%. The margins have also beat estimates, rising 100 basis points to 21.1%. Reliance Industries is expected to report marginal EBITDA growth with muted numbers seen from Reliance Retail and Jio. Gross refining margins in the oil and gas business is also expected to be lower. And in other key earnings to track, Wipro is likely to report positive growth after a gap of 5 quarters. Ultratech's realizations are likely to decline, while the street will also be watching out for numbers from Paytm. It's the final trading day of the week, and we are back with Power Breakfast here on CNBC TV 18 in the Mumbai News Center. I am Hormes Patakia. Let's first take a look at how the Asian markets have started off, and it's a negative start considering the handover that we had from Wall Street. It's red across the board in Asia as well. The Taiwanese index is down over 1%. The Hang Seng also slipping over 1.5% now. Remember, the Hang Seng was a bit of an outlier yesterday, but now is also moving in tandem with how the other benchmarks have moved. The Japanese indices, though, are flat. But the South Korean indices, the Kospi, is also trading with losses of well over 1%. So it's red across the screen in the Asia Pacific, with Hang Seng leading the losses down over 1.5%. But pull up the GIFT Nifty as well, and that might give you an indication of how the Indian markets are likely to start off, with the implied open suggesting a 29-point uptick. But of course, all will rely on how Infosys reacts to its quarterly numbers. We'll talk about that as the show goes by. But as of now, red across the screen in Asia, but the implied open suggesting a slightly positive start for our own markets. But moving to Wall Street now, where Thursday's trading session was all red across the screen there as well. The Dow shed over 500 points, while the S&P 500 also slipped nearly 0.8%. The tech-heavy Nasdaq also shed over 100 points. CNBC's Kate Rooney now gets us a wrap of all the action on Wall Street.
U.S. markets were down across the major indexes Thursday as investors continue the rotation out of tech stocks and a broader sell-off gains strength. The Dow down 533 points, the S&P 500 lower by 44, and the tech-heavy Nasdaq down 126 points. Jobless claims rose last week by the most since early May. Initial applications for unemployment benefits jumped to 243,000, up 20,000 from the week before. According to the Labor Department, the increase in claims is partly because of the impact of Hurricane Beryl. But there were other seasonal factors, including the July 4th holiday and school closures for summer break. The numbers also show employers have slowed their pace of hiring, coupled with cooling inflation. That could boost the case for the Federal Reserve to cut interest rates soon. Online spending in the U.S. surged during Amazon's Prime Day event. New data from Adobe Analytics shows Americans spent a record $14.2 billion during the 2-day sales event. The record spending was fueled by back-to-school shoppers and people updating their home technologies, snapping up tablets, TVs, and Bluetooth speakers. It's a big shift from last year, when inflation-weary customers stocked up on household essentials and office supplies. Amazon also boasted record-breaking sales, but didn't disclose any specific figures. That's what's happening here in the U.S. Back to you in Mumbai.
And staying with the U.S. markets and the U.S. economy, let's listen into some important voices on when they think the Federal Reserve is expected to cut interest rates next. Listen in.
The markets have sometimes been ahead of the Fed. I think right now there's a much better alignment. As I listen to the Fed speak, including, importantly, Chair Powell, they're clearly talking about the dual mandate. They're clearly signaling an increasing confidence. So I, too, believe that a September cut right now seems like the more likely outcome.
My view has not changed appreciably over the last month or so. The cuts start in September. I think that's pretty clear. And they're going to continue throughout the year. If the economy is slowing, more sharply and moving into recession. I think we get prepared for cuts at every meeting. On the other hand, if the data hold up and it's a little bit more soft landing-esque, then I think the Fed will cut in December and then likely at a quarterly pace thereafter. I think the Fed's SEP is a good placeholder for that soft landing outcome.
And let's now get to the final update on our global market wrap this morning. The European markets had a mixed session yesterday. The German DAX shed 82 points, while the British FTSE ended slightly higher, while the French CAC was also in the green. The big cue for the European markets, though, was the central bank's decision to keep interest rates unchanged. And the ECB also gave no hints as to what investors might expect at its next meeting, saying that September was quote-unquote wide open, and argued that inflation would stay above its target well into 2025 as well. And that's all we have on the global market action. But how will all of these cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the FNO setup for the morning as well. It's been an interesting week for the markets, and almost until 1 p.m. yesterday, it was turning out to be yet another sluggish session for the Nifty. But then we saw that massive upside coming in from the lows of the day. The Nifty took support at 24,500, bounced from those levels, recovered 300 points from the lows of the day, and ended exactly at 24,800, and now that keeps them just within 200 points of that historic 25,000 mark. Now, if it does happen though today, it'll be the fastest 1,000-point rally on the Nifty on record. That'll take just 15 sessions because we just hit 24,000 on the Nifty on the 27th of June. But what were the stocks that contributed to that upside from the lows of the day in the second half of the weekly options expiry session? You pull up the contributors and you can see it was IT all the way, TCS, Infosys, ICICI Bank, Reliance. So all of them, the index heavyweights, putting their hand up and taking the Nifty higher in the closing trade yesterday. But Infosys will be the stock to watch out for. Very strong earnings as well. The ADR ended 8% higher overnight, and that will also keep the entire IT pack in focus because the Nifty IT index crossed the mark of 40,000 for the first time yesterday, and it's up 2.5% so far for the week, and it'll be the fifth straight weekly gain for the Nifty IT index. And besides Infosys, there are a lot of other IT earnings to watch out for as well that came out after market hours. Tata Tech, Persistent Systems, L&T Tech, all of them will react to earnings. We'll keep an eye out for the Nifty Bank as well, because after multiple failed attempts to cross that 52,500 mark, it did so in yesterday's trading session led by ICICI and SBI. So it'll be interesting to see if that holds. Now for the week, the Nifty is up 1%. The Nifty Bank has been an underperformer with gains of just over 0.5%. But big earnings day today. Dalmia Bharat, South Indian Bank, there are plenty of earnings reactions, but it's a lot of Nifty companies reporting results today with Reliance, Ultratech, Wipro and many others. And you'll watch out for any other follow-up selling in the PSU stocks, specifically in the defense and railway names as well. And the GIFT Nifty, as we just highlighted earlier, is implying a slightly positive start for our own markets. The implied open going higher as we speak, started off at 30 points, now it's at 50 points. So a positive start in store for our own markets as well. But over to Abhishek now, who would list out the stocks to watch out for in today's trade. Abhishek, good morning. What's on your list?
Good morning, Homa. So to begin with, as you mentioned, Infosys has been clearly the result of the season so far. So they have raised the guidance of CC growth, that is constant currency growth, to 3 to 4% for FY25 from the earlier guidance of 1 to 3%. Net profit has beaten our poll. It's come in at 6,370 crores versus our poll close to 6,200 crores. Persistent System revenue was up 5.7% YOY. However, profits declined by 2.8% on a YOY basis. Tata Technologies revenue were weak, just up by 0.9% YOY, and the profits were down by 15.5% on a YOY basis. L&T Tech, the numbers are below our poll. The revenue was at 2,462 crores. We were working with a number of 2,520 crores. The PAT came in at close to 313.6 crores. We were working with a poll of 327 crores. JSW Infra, weak profits, revenue up 15% YOY, while the profits were down 8.9% YOY. Dalmia Bharat, the revenue were at 3,621 crores. We were working with a number close to 3,600 crores. The profit came in at 145 crores, while our poll suggested 152 crores. Sagar Cement, the revenue was up 4% YOY, and their net losses actually contracted. It's now down to 28.3 crore versus loss of 39.8 crore in the same quarter last year. CIA Automotive, that was a weak result. Revenue was down 1.2% YOY, and the profits were down 28% YOY. Back to you.
Plenty of stocks, earnings reactions and earnings today as well. Abhishek, thanks a lot for that. And over to Sudarshan now, who joins in with cues from the F&O space. Sudarshan, good morning. What's the setup looking like on the F&O side?
Morning, Harma. So 25,000 is almost here. And as you said, if it happens, it would be the fastest ever 1,000-point gain for our benchmark index, that is Nifty. So talking about yesterday, it was a double trigger for market. Weekly expiry coinciding with big move in IT names. And it seems it's likely to continue even today. And that is courtesy Infosys strong earnings. So what has happened over the last few sessions? Look at Nifty's highs and the closing levels. Would see one thing common, and that would explain the strength of this market. For last 3 sessions, we are seeing a close near day's high and at the same time protecting lows of the previous day. And this, if I could say, is on the back of continued buying by FIs. Even yesterday, we saw FIs buying shares of more than rupees 5,000 crore in the cash market and nearly rupees 2,600 crore in index futures. And they have also added 58,000 long contracts, and to hedge that to an extent, have added short contracts of more than 15,000. But there is no change in the thesis. It remains a buy on the fall. Look at FI's long exposure. It remains steady at around 81%. With net contracts of almost 4 lakhs. Now let's come to the option front. Major activities were seen on 24,800 call, where premium was 227, and 25,000 call, where premium was 133. And on the put side, we saw action in 24,800 put and 24,700 put. So what's the resistance and support levels for Nifty? Resistance is now seen north to 25,000, that is around 25,030, and support is around 24,600. On the stocks front, we have now 11 stocks in the band with an addition of 4 new stocks yesterday. But keep an eye on Chambal for it's out of the band. And lastly, 2 stocks in Nifty that might be in the focus because they have been seeing a huge change in the open interest, and those are ONGC and ITC.
Keep an eye out on all of these names. Sudarshan, thanks a lot for that update. Almost there on the Nifty at 25,000. Time for a short break here on Power Breakfast. Up next, Infosys reports a stellar first quarter. More on the fine print on the other side. Stay tuned. Back with us here on Power Breakfast and onto the stock of the morning. Possibly, Infosys reported a stellar earnings in the first quarter. The company has also raised its FY25 growth outlook to 3 to 4% from the earlier range of 1 to 3%. Rima Tendulkar had a busy evening yesterday, and she's now here to decode the numbers with us. Rima, how do the numbers look like?
Well, it's a blockbuster quarter from Infosys this time, and now Infy is the 4th IT company to report good set of numbers ahead of street expectation. For Infosys this time, there is a beat on revenue, there is a beat on margins. So the company's top line growth has come in at 3.6% in constant currency terms, ahead of street expectations of 2.5%. Also, revenue growth for Infosys has come in ahead of peers. And it was driven by a big jump in BFSI. So BFSI, which is the largest vertical for the company, has seen about a 7.5% increase in its revenue growth. Margins too have expanded by 100 basis points to 21.1%, ahead of street expectations. The deal wins for the company are strong at $4.1 billion. The company has gone ahead and raised its FY25 constant currency revenue forecast to 3 to 4%, given the Q1 beat. The earlier guidance was for 1 to 3%. Margin guidance has been retained at 20 to 22%. The only fly in the ointment is the headcount for the company continues to moderate, and now it's fallen for the 6th consecutive quarter. This quarter, hiring for the company is down by 1,900 employees, while the attrition continues to remain stable, largely stable at 12.7%. The stock is down very well. In fact, even today the stock was up. In the last 45 days or from early June, the stock has rallied from levels of 1,400 now to 1,750. So the street was anticipating good numbers, and the company has delivered that.
The company has delivered that. The ADR also is reflective of that 8% higher in overnight trade. We'll keep an eye out on Infosys. Rima, thanks a lot for that. And let us now also listen in to what the management of Infosys had to say on the road ahead for the company.
The way we see what's going on in the market and our guidance, first, we had a strong performance in Q1 on volumes, as well as the point that we made on financial services in the US. Second, we had a very strong performance on large deals in Q1, which gives us more visibility into this financial year. And third, we completed the Intech acquisition, which also helps us in this guidance.
Last multiple quarters, we have moved to the agile hiring base. That basically means we hire freshers both from the campus, off the campus. This quarter, we had a 2,000 person net decline, which is lower than the previous quarters. Our utilization is already at 85%, so we have little headroom now left. So, as we start seeing growth, we will look at hiring. We are looking at hiring 15 to 20,000 freshers this year, depending on how we see the growth.
Moving on from Infosys to the other big earnings today, and that is from Reliance Industries, which will report results after market hours today. And the street is looking at a moderate rise in EBITDA on a year-on-year basis. Sonia is now joining in with a detailed rundown of the earnings preview.
Well, thanks a lot for that. First, let's look at the stock performance. In the past 6 months, the Reliance stock is up almost about 15% at 31.50. Currently, it's had a strong run in the past 6 months. Let's take a look at the numbers as well. On the revenue front, year on year, we're expecting an improvement to 2.3 lakh crores versus 2.07 lakh crores same time last year. The EBITDA is expected to rise to 39,845 crores versus 38,100 crores same time last year. And the profits are expected to rise to 18,432 crores versus 16,000 crores same time last year. Now, what can you expect this time around? The consolidated EBITDA will see a marginal growth year on year. However, sequentially, we're expecting a weaker growth on the back of lower gross refining margins and muted growth in the Jio and retail business. Jio is expected to see stable average revenue per users and 9.3 million overall net additions versus 11 million quarter on quarter. Even the average revenue per user is seen flattish at 182 versus 181.7 last quarter. Now, we can expect a modest 2% quarter-on-quarter EBITDA growth on increased store footprint and operating leverage in the retail business. So, yes, it will be quiet in terms of a sequential performance for the retail and telecom business, but on a year-on-year basis, we are expecting a decent improvement.
Sonia, thanks a lot for that. And moving on then, the Niti Aayog has now recommended fiscal incentives and import tariff reductions on electronic components, saying that this would help the domestic electronics industry grow fivefold from just over $100 billion in FY23 to $500 billion by 2030. My colleague Danish is here to get us more on this. Danish, what do you have for us?
Well, Indian government's public policy think tank Niti Aayog has come out with a report on how India's electronics manufacturing sector can be a part of the global value supply chain. As per Niti Aayog, 70% of the world trade that is taking place right now, it is through these GVCs. And as far as India's electronics manufacturing is concerned, it has been a huge hit with different PLI schemes, especially in the mobile phone sector. But the global opportunity is $4.6 billion strong, and India's contribution is just $100 billion in it. And in order to increase India's participation, Niti Aayog has come out with 6 major recommendations, and Niti Aayog has suggested that the government should come out with fiscal incentives for components manufacturing, and the product and design ecosystem should also be developed in India. The government needs to scale up industrial infrastructure, and the tariff simplification, rationalization of taxes is one of the major recommendations by Niti Aayog, as they feel that this is a major trade barrier right now. Similarly, Niti Aayog has also suggested that the government should upskill the current workforce, and one of the most important facts in the recommendations is on the tech transfer. They have said that the government needs to simplify the process of tech transfer, which is required for component manufacturing. So, all in all, if we see, Niti Aayog feels that the government needs to do more in the entire global value supply chain, and they need to set high targets going in the future.
Danish, thanks a lot for that update. Time for a short break. Up next, we get you cues from the commodity space. Stay tuned, back on the other side. Welcome back, and Manisha Gupta is now joining in with all the updates from the commodity space. Manisha, good morning. What are you picking up today?
Well, I want to talk about the metal prices first, Hormuz, and with the China plenum meeting coming to an end and no major announcement is really hurting this sector right now. So I'll start with silver, which is part precious metal and part industrial metal, and we have seen the silver prices decline 3% overnight. It's trading below $30 an ounce. There are China demand concerns. Markets are anticipating that there could be stimulus measures announced outside of this plenum meeting as well. But the damage is clearly being seen across sector. If you look at the copper prices, they are trading at a 3-month lows. Weak factory activity, manufacturing data is weighing onto the markets here as well. The iron ore prices are trading at a 1-week lows. Zinc prices trading at a 1-week low. Aluminum is trading at a 3-month lows as well. So the markets will watch out for what China does from here on. In the meanwhile, we've seen some steady moves come in for the energy market. So the crude prices are holding around that $85 a barrel mark. This is a third straight week that you have seen decline in the U.S. inventories. The Canada wildfires could impact 400,000 barrels per day. That is what is also adding premium to the markets right now.
Interesting developments there across the metal space from China. Manisha, thanks a lot for that. But moving on to some other key developments from the US now, and the Democratic Party pressure continues to mount on sitting President Joe Biden to back out of the presidential race. Reports now suggest that top Democrats Chuck Schumer and Nancy Pelosi have raised their concerns with the president over the Democrats losing ground in the House and over Joe Biden's ability to contest for another term. Now, former President Barack Obama also reportedly told allies that Biden's chances of re-election is diminishing and he needs to consider the viability of his candidacy. Bringing you some national updates now. Bangladesh is reeling under widespread protests triggered after Prime Minister Sheikh Hasina-led government took the decision to introduce public sector job quotas. The protests have turned violent in the past couple of days, with the death toll now reaching 30. Protesters are demanding that the state stop setting aside 30% of government jobs for the families of people who fought in the 1971 War of Independence. And with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call takes the action forward this Friday morning.